Yeah, you can start.
Hi, good afternoon, guys. This is Steve O'Hare from Pia First. Today I'm doing a live analysis of some FX markets, equities and commodities, and talking about a little bit about correlations between the markets in order to understand them correlations and to maybe come up with some trade ideas based around those correlations, or just being aware of them so that it gives you maybe more idea of what's affecting the markets individually. So I'm going to go straight to my charting package. We use the Saxo Trader 2 charting platform. I've set up a couple of markets on there, and really I'm predominantly going to look at oil and the correlation between oil and dollar CAD, and gold and the correlation between gold and Aussie dollar, and talking maybe a little bit towards the end about correlations against equity markets, but mainly focusing on the commodities. Let me just bring my screen up now. Right, so this is I'm just having a look at the DAX actually to start with. This is what we're seeing in the DAX at the moment. This is the market, and just as a reminder, anyone who's tuned in to this webinar, I'd like to keep it a little bit interactive with you. So I'm more than happy to discuss items as we go along and try and discuss them in a bit of further detail. We predominantly look at the technical analysis side of the markets when we talk about trade ideas. We understand also things that there's different types of analysis to look at. There's fundamental analysis, sentimental analysis, technical analysis, and it's good to have an understanding of the fundamental side of things and the factors that affect the market on a longer term basis, because this is what drives markets and drives price on a longer term basis. For trade ideas, we specifically look at intraday trade ideas or daily trade ideas, and we use technical analysis as a tool to find the ideal entry and exit points on the markets, because obviously on a day-to-day basis you get a lot of noise in the markets, you get a lot of movement in prices. This is participants on a shorter term basis getting in and out of the market, but obviously the longer term drivers are the economy and fundamentals and bigger traders, banks, funds and everything. So being day traders ourselves, we look at the way we can use analysis to get into trades and to pick good levels. So I'll start off with dollar CAD and oil. So looking at the oil market, I'm showing you a monthly chart. This is a line chart. It's line charts for the longer term charts are very good. They consider the points, because you're looking back over a period of, in this chart for instance, 15 years. They're good to look at because they focus on the most important price point on a monthly chart, which is the closing price. For instance, as you can see, we've drawn some Fibonacci lines here, and if we were to change this to a candlestick chart, you'll probably see that you've got prices outside of the actual closing prices. The closing prices are key. If you're looking at things on a more shorter term basis, you can still look at monthly charts, and you can get candlestick formations which can give you other ideas, but to analyze things from a long-term perspective, we're not really looking on trade ideas. We're looking at what the correlation is between these products, and we can see there's a decent correlation here, and this is one of the most common correlations we find in markets the link between oil, which is priced in US dollars, and dollar CAD. Now the US is subscribes to Canadian oil and is one of the biggest. Canada is one of the biggest suppliers for the US oil, and we can see with this overlay of the US oil, which is in black, and the brown line is dollar CAD. And what we see is this is known as an inverse correlation. So effectively, as dollar CAD prices move lower, that's the dollar getting sold, the Canadian dollar getting bought. Oil prices naturally move higher. So as US oil decreases in value, it's expected that dollar CAD will move higher, and the opposite if oil advances. So knowing this correlation, we can successfully, form an opinion based on two different markets. So from an oil trading perspective, I can basically look at the Canadian dollar and formulate, not just be looking at one market, so looking at other markets as well. Hi Ben, nice to hear from you. It's good to get a little bit of feedback from anyone, good or bad. So what I'd like to do in this, because there's something when I put this together this morning I was quite interested in, may make quite interesting reading going forward. It's more of a longer term outlook. But what I'll do first of all, I'll strip away the oil from here. And this leaves us just with a dollar CAD monthly chart, monthly line chart. Now, obviously, one of the things I look back on, 2007 low and 2011 low. I mean, that just sticks out. Very, very key level there, 94.28. Basically, this is a very good formation, very profitable formation. It's called a double bottom. Now, a double bottom formation only becomes triggered once you get a break of the high in between the two lows. So this is the high in between the two lows. Put the line in there so we understand. And as we can see, the high in between the two lows comes in as 127.53. And basically, from this as well, a double bottom is a nice formation because it also gives you a target to look for once the formation kicks in. Let me just bring. So we'll have a measured move for this. So once this prices in dollar CAD break above 127.52 and close above there on a monthly basis, which was here in July 2015, that signals an extended move higher. An extended move higher will normally equate to the distance between the low and the high of that move. And there we get a eventual target of 160.81. This coincides obviously with the highs way back in 2002, early 2002. So that's what we consider a long-term target now in dollar CAD. Now what we'll do, we'll introduce the oil again into the equation. And we can see that the negative correlation has been pretty much bang on throughout. Let me just get rid of these trend lines that I've drawn in for whatever reason earlier. And we can obviously see as well that the oil price highlighted in black here is trading on its lows, on its significant lows, and with the dollar CAD heading towards the highs back in 2002. We expect that oil will also be targeting lows, which again coming around about $20. So that's our overall long-term outlooks in oil and dollar CAD. And because obviously this correlation is quite a significant correlation, we can then utilize this on a daily basis. So we can then break things down to a shorter time frame to find a product which we want to trade, which, you know, and know that there's other chart to look at to back up this trade. So I'll break down this to the hourly chart, and we're looking at the March contract at the moment, and we can see obviously over the last couple of weeks we've had a rally in oil from this like low around 27.50. Hi Roland. We've topped out around here. Something, you know, so I'm bearish of oil, and I'm looking to sell into rallies. Just one thing back on this monthly chart that we looked at, there was pretty significant levels in oil that I consider maybe game changing, and they come in around about the $48, $50 level. So if oil is to break back above $48, $50, I can't see it happening this year, then my long-term outlook will start to change. In the meantime, I'm bearish of it. I'm looking for opportunities to set shorts in oil. Lost my thread a little bit. There we go. And this is the chart I'm looking at the moment, the hourly chart. Now I'll strip away dollar CAD again. I'll add it back in a minute. I'll show you why. And this is our oil. Straight away we see this large downtrend, and we saw a significant move back up to here, and this was last week, where prices stalled just in front of the 61.8% retracement level. It's a significant retracement number, so we consider that a bit of a possible turnaround. If we focus in on the candle that was provided for us back then on the hourly chart, that's a shooting star candle. It's confirmed by the following candle, and since then prices have failed to close above that, and so oil we consider as being under pressure. Momentum still positive, but momentum's losing ground, and obviously we're approaching the zero line on a momentum basis. Let me just that's not the momentum chart I want you guys to see. It's a standard momentum chart, and we see it has turned negative now. So I'm inclined to be setting shorts around this area. Stop on the trade would be a break above $35. So you're looking to set shorts around about $33 this morning. The high this morning, $33.33. I'm pretty sure we were, let me just bring our commentary up for this morning. And I'll show you if I can bring this up. It will give you a good idea of how we present our trades in the morning. I'll bring up another screen actually. Can you actually see this screen? don't know if you can. I can't really see you. You've been able to see this screen that I'm trying to show you. Let me try another screen. Yeah, this is hopefully a little bit better. So here we are. This is our commodities from this morning, and I'll focus in on crude oil and give you an idea of what we were looking to do this morning. We were looking to sell. Price have continued the bullish move higher, resulting in 4 consecutive positive days. We'll pop that into, I'll show you where we got that from. 4 positive days, although Friday's candle was an inside day, so it's a little bit indecisive. Price actually formed a doji candle, confirms a stall in the recent move, posted mild net daily gains, all trading confined to the previous day's range, indecisive day. A shooting star has been posted on the intraday charts. Right here, we look for a temporary move lower, further downside is expected. And you can see from the chart that's on here, we posted this when the market was trading 32.83, and we looked basically, as predictive analysis works, we have set criteria, set bespoke levels that indicates that we use, and that was signaling a sell at 33.50. Now the market in the last hour has got up to $33.33, so it hasn't quite triggered our sell level, and we've seen a reaction lower on the back of that. So you know, we sort of we give the levels, how traders trade them. It's down to them. We generally advise. You know, we can't really advise individuals, so we have to give a broad outlook on how to trade our levels. And obviously, as no 2 traders are exactly the same, it's quite a difficult thing to do. But we generally look to try and sell in front of our levels. So if it doesn't actually trigger our level, then we don't post a P&L for that market. But obviously, if I were looking to trade oil and I'm bearish of it, I wanted to follow this signal, I would start to sell in front of 33.50. Whether I would have sold 33s this morning, I haven't done so. But it's generally, we're looking to make 100 points on this trade. The stop on this trade is 50 points. So it's a 2-to-1 risk reward ratio. Felix asked me, or if I'm always using Ichimoku for my trading approach, and yes, in fact, I use Ichimoku not necessarily from a signal perspective, although I do look at it. It's a great indicator in terms of getting a quick snapshot of what each market's doing. So we look at 30 different markets every morning, and we quickly scan through the markets, looking for the best opportunities, looking for the setups. And I really like the Ichimoku cloud as a good visual indicator. I've got a couple of models based around Ichimoku cloud, trading models based around it. Doesn't just use Ichimoku cloud, it uses other indicators as well. And I advise that as well when people are trying to create models or trading programs, then don't just rely on one indicator. Now the cloud, the Ichimoku indicator consists of a number of different inputs, and it's a really good overall indicator, but you know, shouldn't be used alone. It's good to use oscillators, trend indicators, candlesticks, you know, a combination. And I spoke about this last week on when you talk about people developing their own trading plan. As I say, every person is an individual, and in that respect, they're individual traders who have different ideas, different senses of timing, and different strategies that they can formulate. And I really believe that everyone has the potential to become a trader, but you just have to make sure you do your homework, make sure you find what suits you best, what style of trading suits you, what your risk reward parameters suit you. Make sure everything works for you. It's no good in passing a highly volatile trading system to someone who's risk averse on a short-term basis, because it won't work. You've got to be confident in your methodology and your trading plan to be successful on a longer-term basis. So again, if we just popping back to oil, hope that helps, Felix. Again, on here there's a shooting star type candle. This has been followed by confirmation with this candle to move lower. This is an hourly chart, so there's still over 30 minutes for this to be confirmed. So you wouldn't say that's confirmed until 1 o'clock our time. This is 12:22 now. So we're looking at that. We've got the sell signal in oil. Then we pop across to let's see what we've done in dollar CAD. So we add dollar CAD in. And we can see similar sort of outlook in dollar CAD. This was our call this morning. Trades at the lowest level in 19 days. We have a 78% Fibonacci pullback, 139.65. We get oil out of the way because it's let's see, let's take this away. Right, add my studies in very quickly if I can. This is a sort of approach that I'd use on a daily basis. I have got the dollar CAD set up elsewhere, but it just seems a bit more appropriate to do it this way. And yeah, and we can see the there's a little bit of you see prices selling off here, momentum's picking up. And you're getting the divergence here. So this is like bullish divergence where the momentum indicators rising and the price is selling off. And this again looks positive. And we went for a slightly different approach today with although the bears were in control. Again, we look at the daily chart. Bears in control, obviously, but also you've got an eye on the bigger time frame. You see a pullback again to the 38.2% Fibonacci retracement. Again, that's a quite significant retracement. We saw in the oil, it was a pullback to 61.8, which is a more decent one, a bigger one, a better one. And we came in this morning and the overnight dip had been bought into and the scope of further bullish pressure going into this morning. So we looked to basically wait for a little bit of confirmation from the market. You can see the prices by this chart were trading at 140.10, and there was resistance of 140.20 here, so I looked to buy a break of 140.25. This has played out nicely as well. So where we didn't get triggered in oil, we were definitely triggered in dollar CAD. Now once the trade goes on side by a fair amount. On here again, we're targeting 75 points with a stop around about 40 points, so just under 2 to 1. And but as soon as the trade goes significantly on side, it starts to make headway above the Ichimoku cloud, then I've pulled the stop in. So the prices have moved to the upside, and we now look to raise the stop to 140.15. So we try and introduce a bit of a money management, or maybe you shouldn't say money management, maybe you should just say trade management into this to assist in helping people formulate their opinions on how we're looking at it and how they can look at it. And we've seen a nice rally. It's gone back to 140.25, dipped back down there after being triggered. Our stop was moved up to 140.15. I'd like to give it a little bit of room, and that trade's still looking quite nice at the moment. So still quite positive on that trade. So that's formulates two ideas I didn't pick them on purpose. It might look like I did now, but you know, there are times when we have a number of analysts. One analyst might do the dollar CAD. One analyst might do the oil markets. And if you put a chart in front of a dozen analysts, they'll come up with 24 different trade ideas. I'm sure that's been mentioned before. We try and have a criteria that we stick to, so that we formulate ideas. So it doesn't matter which analyst is formulating the idea, they will always, they will 99% of the time come out with methodology based on the same thing. So you're getting like a uniform trade idea from PIA. It's not just we want to buy dollar CAD because I'm a dollar CAD bull. We stick to set criteria that we make sure that we all understand that criteria and work to that criteria and check each other's work before they go out. So it hopefully gives a sound trade ideas every morning, and that, you know, our clients are happy that they're getting a good technical analysis based trade idea, and not just something that is hit or miss like a lot of the systems I see out there. So that is dollar CAD and the oil, and let me just take you back to the chart. So right, we're back on the chart and we're looking at gold. So we're looking at the correlation between gold and Aussie dollar. So let's take you to a gold. Here we go. Now, correlations obviously are useful to just finding direction in different markets. Where we had the negative correlation between oil and dollar CAD, we have a positive correlation that we show between Aussie dollar and gold. Now, you know, this is generally, this will be the way it is for a number of reasons, and it's good for traders to understand correlation, so that then when they're forming their opinion on markets, you can take two seemingly different markets or assets and see how the market's price move relative to each other, obviously, but then you might have resistance Hi guys, I'm back, I think. Am I back? Can everyone see me? Yep, lovely. Okay, we'll carry on. Sorry about that, I don't know what that was. So it's we're talking about the correlation between Aussie dollar and gold, and the fact that Aussie dollar is priced in US dollars while gold is priced in US dollars per ounce. So when the US dollar gains or strengthens, both assets tend to depreciate in value. Secondly, the Aussie dollar has a high correlation to gold due to the gold mining operations in Australia. As gold prices obviously fluctuate, this increases or decreases the amount of funds transferred into Aussie dollars to actually purchase the metals from Australia. These obviously essentially they change the demand for the currency and obviously directly cause changes in the pair, the Aussie dollar against the US dollar. So you know that's the significance of the product. So they're positively correlated, and where we again can see these correlations over time, you may be able to see a significant move in one product, which then might naturally kick in and give you opportunity in another. Now, it's a little bit again. We've got candlestick charts here. But you can see the correlation is quite significant, and then there's a little bit of a change here this week. Now, this was quite significant. At the start of the year, there was equity markets took a hit, and obviously there's a correlation between equity markets and gold. Gold is seen as a safe haven currency. And when equities are taking a battering, which they did at the start of the year, a lot of fast money goes into gold as a safe haven currency to protect money and value. So we saw a really nice rally in gold. It took it from just above the lows of November, around about the $1,050 mark, to $1,113, and we saw the opposite in the Aussie dollar, and this opposing move lasted a week, and then we saw the correlation sort of come back into play. So now from the lows here in Aussie dollar of 68.26, we've seen a nice squeeze higher up to a high of 71.40. So it's, although we have this significant move against, and that's obviously because gold is not just correlated, or currencies aren't just correlated to one thing, but over time there are some correlations which you can rely on. So you know, you've got to bear these in mind and trade with them on the back of that. Now, Aussie dollar, if we look at Aussie dollar weekly basis, again a line chart, we are at significant lows, and there seems to be no slowdown in this, and although we have sort of like got through this 78.6% retracement over the last 7 years. You've seen a little bit of support coming in, and so there is potential to correct, but I wouldn't be looking to really get long of this at any time soon. There's still a bit of a way to go until we break the 74 area resistance here. Then that might change my mind. Now, even breaking it down into a 4-hourly chart, we get a nice pattern emerging. And these are the things that I'm constantly doing, going through the, right, let me just see, you can't see the chart. Sorry. Sorry, thanks for that, Felix. least someone's paying attention. Now, I'm constantly going through different time frames to come up with ideas and to come up with formations and to look and to give a good backdrop of where the immediate trend is, whether the immediate trend, say on a hourly chart, is being impacted or it looks to be impacted by a higher time frame chart, so maybe a 4-hour chart. So I like to look at 4-hour charts, hourly charts, daily charts, weekly, monthly. I try and focus on them time frames. Try not to go too much shorter than that. 15-minute chart and half-hour charts, they seem to be pretty well covered by algo systems nowadays. So it's nice to just step away from that and try and build up a good trade idea based on slightly longer term charts, so there's less noise. But from this we can see a really nice formation that I always look out for. It's called a head and shoulders formation. Now this is a reverse head and shoulders formation, and what we see is a shoulder forming here, S for shoulder. We see a head forming here. We see the shoulder coming back to the neckline. I'll draw the neckline in. And we see, the shoulder here. So again, this is a great formation because it gives you a great indication, great idea of where a formation has triggered and where the potential is for this formation to move to. So I'll measure from the tip of the head, or the bottom, because it's a reverse formation, and then we can place this on the breakout, and that's the measured move target. So in Aussie dollar, we're looking to see, we're looking for a move to 72.63. So that's quite a significant rally we're expecting in that. On our day trading today, which I'll bring up now, you can see we were looking to buy at 70.30, and this hasn't been triggered. Prices have remained stable this morning, going sideways. We're looking for this corrective channel trading to continue, and we're looking to target 71, the figure. This is on a day trade. On a more medium-term trade, we'll be looking at it going higher than that. I'll just flip back to the actual chart itself. So yeah, we're looking for it to go higher, and we were looking to basically set longs around this level all the way down. Stop on this, on the trade here, would be a close below 70, the figure, really. A close below 70, the figure, would be significant reversal of this head and shoulders and cancel the trade out. So we'll be looking to buy here, going to get long around these levels, 70.50, 70.60, targeting 72.60. So a 200-point target, and your stop is 60 to 70 ticks. So it's a 3-to-1 risk-reward ratio. And again, we could sort of like look to factor the gold into this as well. And to do this, I'll strip the Aussie dollar out, as we just analysed it on the other chart. As you can see, we're in this descending wedge, ending wedge formation. This looks like a very bearish formation, and obviously it's in a downtrend, but it's in a narrowing downtrend, like a wedge formation. Momentum has picked up from the lows of 2013. So while you're getting lower prices, the momentum isn't marrying up to that. You're getting slightly more positive momentum. So this indicates that we're getting bullish divergence. But again, this may have a lot further to run. I would say it would only be maybe next year that I'd start to question whether this has had a serious chance of reversing back. So while it remains contained within these two trend lines, I would look to be trading this range. So from a medium-term basis, I would still be bearish until we broke and closed above $1,200. On the downside, this is still targeting psychological $1,000 mark. So there's still potential for that. But in the last couple of weeks, obviously from the start of the year, with the equities being hit very hard, we've had this this correction higher, and it's got more to go, got more room to go. It does, you know, there's no reason why it can't rally significantly from here. It's going to get some decent resistance coming up. And this is a weekly chart, remember. So we've got 1145 as a good resistance. There's a little Fibonacci level here, which was a level that we targeted way back in 2013. It's a 61.8%, 1154. That was a retracement level, and markets found this is quite a pivotal level. So around about 1150, you'll see significant lows, closes, opens, and this congestive area around here, and again back in October last year, was very significant. So for prices to show any real signs of serious reversal, they'd have to break above this 1200 level. But you know, first of all, they'd have to tackle the trend line at 1145. So that's where we're basically looking for this market to move to over the coming weeks. Again, I'll hop back to my bring this up. I'll hop back to our trade idea from this morning to give you an idea of what we posed this morning. And on gold, we were looking to buy it at $1,115. The commentary was price action produced another positive week last week. Bullish hammer has been posted on the daily chart. A morning star formation has been posted at the low, and the move higher is positive sentiment, confirms our bullish approach. So again, if we look back at other charts in gold that we were looking at in December, it was quite significant that we had this break up higher in January. Again, we found another double bottom, which we talked about before. The double bottom was significant after it broke 1088, and it closed here 6th of January above there, closed at 1093. So that triggered it, and that created a measured move target at 1131. So we got close to that last week, 1128, the high on the 27th. And it pretty much, you can see this trend line as well. It's the significant support line, and with the resistance coming in, as we just mentioned, at 1145, no reason why can't see this out. 1145 will mean that we'll have to break through the 61.8% retracement. Again, that's another significant Fibonacci retracement to bear in mind. So I think you're getting an idea of how I put my trade ideas together. I'm not giving everything away. I like to keep a little bit in the bag. And yeah, so we're seeing this like bullish hammer on the daily chart. This will be confirmation as long as prices hold on and close around about these levels today, and no reason why we can't see this push on this week and get up to these levels. 1131, obviously the target for the double bottom. Once that's satisfied and prices, you know, have another turn to the upside, there's no reason why it can't continue. So we're positive on gold. As we mentioned, we're bearish on oil, and now I think it's only fair to spend a little bit of time just on equities. Is there any markets that anyone would like me to quickly analyze? I can do maybe a couple of minutes on a couple of markets, and just at the same time we can flick through our trade ideas. But I'm quite open to any interaction. Anyone want to pick anything in particular? Let me just get off Santa again, back onto the charts. Japanese yen. Yeah, Japanese yen. Very interesting markets. And what I can do is, I should have all of these set up, but let's go for the dollar yen first. We've got a couple of trade ideas. Dollar yen in particular is, let me just get this in. Obviously had a big move last week. Let's take the dollar CAD out. Again, it was pretty much a similar type of reverse head and shoulders pattern. I don't know if I can quickly flick to. Right, here's our dollar yen chart. Looks a bit of a mess, but I'll explain it briefly. We have the an AB equals CD formation, which was highlighted back here. It targeted hit really nicely, and we've had the correction lower. Now, I'm sure that I had a no, I can't actually find what I was trying to explain. But yeah, the inverted head and shoulders setups have been pretty significant recently. I mean, markets have been very volatile. It's been a very volatile start to the year. But you know, it's what's that? Here we go. Let me just get off this and get some. Again, you've got the head and shoulders formation. Maybe that's actually inverted like that. So we got the shoulder here, head here, shoulder here, and the break, the neckline. And this was obviously a significant candle. Now this is this rally, this overnight. Well, this rally was pretty significant and remains significant. And we were looking to buy on a pullback on Friday, and the same today. And today we were looking at actually buying a dip to 121. And that got close. And again, really a bit frustrating. I'll just share the chart to prove what I was saying. This was our commentary from the day. Prices have continued the bullish move higher and resulted in 4 consecutive positive days. Bullish reverse head and shoulders has formed. The formation has a measured move target of 122. We have a 78% Fibonacci pullback level at 121.93. The intermediate cloud resistance comes in there. Let me get the each moving cloud on there. On the daily chart, you can see that cloud resistance comes in here as well. So we're looking to buy a dip, and ideally we were looking to buy a dip at 121. That was our bespoke level. Low was 121.05. So hopefully some traders would have stepped in front of our level and got along with that, and seen it a bit on side. So you know, we're positive on dollar yen. And again, here's euro yen, similar sort of move. And again, there still looks like there's more to go. The significant levels here would be the 134.50 level, which would be the downward trending part of this channel. Also congestion around about the highs of December, 134.57. So no reason for this not to continue. 1, 2, 3, 4, 5. So we've got 5 positive candles, and today's candle looking pretty much like a Marabuzo candle. So tomorrow, if this Marabuzo was to remain in place, I'd be looking at the to find the Marabuzo level. You want the midpoint of the open and the close, and that should provide good support. And again, you can sort of back it up with even pivot levels, which I like. You know, a lot of people look at the pivot levels, so the more people are looking at them, even you know, the fund traders, fund managers, bank traders, they all look at these levels. Today the pivot level was 130.89, and I think you'll find tomorrow as well we'll be looking at a 50% pullback of this move. So about 160.80. You're looking at about 131.15 as that'll be an ideal level to get in at. It'll be still with the trend, trying to stick with the trend. So yeah, as far as them sort of like dollar yen, euro yen look very positive. You know, strong dollar at the moment as well, so it's very difficult to argue with in my book. And I think we've got a little bit more to see. A lot more volatility to come in this month. I think there's a number of big funds and banks have set their positions for the year, but I'm sure we're going to see some volatility that's going to question everyone's outlook this year. So yeah, I'll wrap it up there. I hope you've benefited from my analysis and my live analysis and the correlation that I've discussed, and I look forward to providing a few more webinars. Again, very happy to listen to what you guys want to see, and I'm been in the market for far too long, and more than happy to share my my wealth of knowledge and trade experience and analytic experience. So yeah, get in touch with FX Street, discuss with, speak to them, put some ideas out there, and I'm more than happy to present anything like that. If it helps you guys, then great. All right, nice to speak to you all, and thanks for all your input. Sorry about the connection drop, but hopefully we didn't lose too much, and I'll speak to you all again soon.